Hi guys. Today we will analyze the Boeing company stock, and calculate its intrinsic value using two different valuation models. Enjoy! Hit the like button and subscribe to my channel if you want to see more videos like this. Technical analysis. Boeing is a bad performer in the overall market. The long-term trend is still negative, the short-term trend is negative. It is advised to wait a little bit longer to see how this turns out. Support levels are around $176 and $150. The next support level is around $115. Resistance levels are around $193 and $212. The next resistance levels are around $240 and $258. In the last month the stock has been trading between $168 and $207 range, which is wide. It is currently trading in the middle of this range. It may be a good idea to wait for a pullback before considering an entry. The stock has an average volume of 9.6 million. This is a good sign as it is always nice to have a liquid stock. The stock is currently trading in the lower part of its 52-week range, which is not a good signal. The stock has been in downward trend since March 2021. Be careful. Intrinsic value. Buy low, sell high. We have heard it many times before. But how to know when it's low and when it's high? The intrinsic value of a stock is its true value. It refers to what a stock is actually worth, even if some investors think it's worth a lot more than that amount. Intrinsic value is important, because it can help investors understand whether the cost of a stock is undervalued, or overvalued compared to the market value of the stock. Let's calculate the stock's intrinsic value. For Boeing Company, we can only use one valuation model, discounted free cash flow model. Unfortunately, for Boeing, we cannot use the second valuation model, valuation based on earnings per share and 5-year average P/E ratio, because Boeing has negative earnings per share. It means that the company is spending more than the company is earning. Generally speaking, a negative earnings per share is not a positive sign for investors. Companies with poor financial health, temporary distress, or bad operational efficiency will usually report negative earnings as a consequence of such problems. First model. Discounted free cash flow valuation. This spreadsheet contains some financial data that we will use for the stock valuation. We see that the average revenue growth rate of the stock has been around -7% per year, for last 5 years. We see that the average profit margin of the stock has been around -2% per year, for last 5 years. Also we see that the average free cash flow to net income rate of the stock has been around 134% per year, for last few years. And we expect 8% per year average stock market return. Now, let's consider 3 different scenarios for the Boeing Company: bad, average, and good. First scenario. Boeing will have bad performance in next 5 years, and we will use the following parameters in our calculation. Future revenue growth rate would be a low 6%. Future profit margin would be a low 5%. Future free cash flow to net income rate would be a low 80%. In this case, the fair value of the stock today would be $81. Second scenario. Boeing will have average performance in next 5 years, and we will use the following parameters in our calculation. Future revenue growth rate would be average 8%. Future profit margin would be average 7%. Future free cash flow to net income rate would be average 90%. In this case, the fair value of the stock today would be $130. Third scenario. Boeing will have high performance in next 5 years, and we will use the following parameters in our calculation. Future revenue growth rate would be high 10%. Future profit margin would be high 9%. Future free cash flow to net income rate would be high 100%. In this case, the fair value of the stock today would be $194. The fundamentals are terrible. Both the profitability and financial health of Boeing have multiple concerns. So, based on that, I would call the stock overvalued. Also, the stock has been in downward trend since March 2021, and it can drop further. I'm pretty sure at some point the price will rise up, but who knows when. The company's image has been damaged. It may take 3 to 5 years to restore its reputation and profit. There are too many risks associated with Boeing. But I'm ready to take the risks, if the stock drops below $130. If it doesn't happen, let it go. There are many other good stocks to choose from. Company's strengths. The Boeing Company is an American multinational corporation that designs, manufactures, and sells airplanes, rotorcraft, rockets, satellites, telecommunications equipment, and missiles worldwide. Boeing is among the largest aerospace and defense companies in the world. The company has good long-term prospects due to its significant backlog and strong presence in the growing commercial aerospace industry. Its profitable defense segment is a top 5 defense contractor. Boeing has cleared a major hurdle as the Federal Aviation Administration has rescinded its grounding of the 737 MAX jet. Looking ahead, once the 737 MAX and 787 are fully back in the air, and Boeing is accelerating production, analysts expect to see earnings power of up to $20 per share. But it looks like that will be 2024, 2025 at the earliest. Boeing is expected to show a medium growth in revenue. In the coming 5 years, the revenue will grow by 10 to 12% yearly. In the next 5 years, the earnings per share will grow by 12 to 15% yearly. Risks. Boeing faces risk from complexity of modern aircraft, cyclical demand, and high debt. Airlines also have a history of financial instability, sometimes resulting in failure to make scheduled payments. The shares remain more than 55% below their all-time high as the company weathers the coronavirus crisis and problems with its 737 MAX. Recent delays on the 787 Dreamliner have further pressured the shares. The pandemic is affecting every aspect of Boeing's business, including airline customer demand, production continuity, and supply chain stability. To align the business with the new market reality, Boeing is taking cost-cutting steps that include reducing commercial airplane production, cutting headcount, and consolidating facilities. Boeing also faces risks associated with its pension obligations. Like most military contractors, Boeing faces risks related to the cancellation or curtailment of Defense Department contracts. The profitability ratios for Boeing are negative. Return on assets of -3% is below the industry average of 1.7%. Its profit margin of -7% is below the industry average of 3%. Boeing is not financially healthy enough and could expect problems in meeting its short-term obligations. The company has negative shareholder equity, which is a more serious situation than a high debt level. Boeing's earnings are destined to be volatile and murky for the next several quarters. Thank you for watching. If you found this video helpful, please hit the like button and subscribe to my channel.